Good morning to everyone around the world. Listen up. It's 11/8/2015, 9 a.m. Pacific Standard Time. I have a weekly chart on the S&P 500. And one of the things that I want to make clear is we had a big sell-off that we had said that was going to happen when we were up here at these major resistance levels. And we did. And the markets got slammed. They put in a double bottom down here, roughly right around 1871 on the S&P 500. And basically, when we take a look at the counter trend on the S&P, is that the S&P 500 and the technical damage that was done on all of the charts, all of the indexes, was the fact that we had not had a real meaningful sell-off. And we put in this low right here, this line that I'm showing, the beige line, that's a 100-week simple moving average. And we have a counter rally, which puts us into a 6-week consolidation. I'll draw a trend line right here. These are the wicks. This was that sell-off in the S&P. We went from 2135 all the way down here to 1871. So now that we had this 6 weeks of consolidating with the volatility that would be extremely high, and as it was, therefore, we're going to refresh everyone's memory at stockmarketfunding.com. Basically, when we were selling off back over here, and we have the live analysis, back to Black Monday markets tank 2015. Black Monday 2015 Dow Jones down. That was a capitulation. Was down 1,000 points in a single day. We also covered the S&P 500 index right over here. This was that opening bell that day when the Dow had dropped well over 1,000 points. And not only that, here was another, believe it or not, Black Monday, Dow Jones on Black Monday. The live videos are here for everyone to get acquainted with what we were talking about when we said that we were going to have to come down hard. And we did. And it's all here. So feel free to go through those videos so that you can understand what I'm talking about here now. We're coming up to a 6-week rally. Pretty much we were oversold when we were putting the bottom consolidations in. And here is another thing that must be considered. From the all-time high of 2134 to the very low of 1867, then we have the that was 164 points that the S&P lost. And during this time, the fear indicators were high and people were willing to throw in the towel. And everyone that was a bull was all of a sudden talking about they're not a bull. And so I'm going to take this very bottom right here. Like I said, that's 1871 to the numeral number. One of the things that we're going to point out on the S&P 500, as we just did from the 2134 to 1867, is that the 6-week rally that most people were not involved in, this is that 6-week rally from 1867 to the Friday closing bell. The Friday closing bell that we had was 2116, and that was on the week of the first week of 11/2016, Sunday, a week ago, and we've had a 249-point rally. Now, when we talk about seasonality in the S&P, we really do talk about Thanksgiving, that's not far away already, and Christmas. But you see, here's the problem for people. Santa Claus has already come here, and we made a from the lows in here in that 6-week pattern is that We've already robbed Thanksgiving rally, and we have robbed the December Christmas holiday rally that markets like to seasonally go up. One of the things that I can say is that we're starting to run in to the beginning of an oversold territory, just as or an overbought territory, just as we were oversold down here. We were oversold. We knew we were going to go up. And we've had the earnings season, which is full in play still. And we have that weekly sales signal that is now only minus 5.1. The previous week was minus 11. The week before that, in October 18, minus 18. And now that we have recovered a lot of it, when we pop, and if and when we do pop a weekly buy signal, just remember the buy signal was over here. The buy signal was over here. This particular type of buy signal that could come into play is going to be a very strong path to resistance on the S&P 500. Nothing is going to stop the volatility because here's what it's about. It's about this. This is the time of year where markets like to go up, and we are going to have an extreme drop coming again. We haven't missed one yet in all the 30 years that we've been around markets. So basically, as I had said, we could rally right up going into January 2016. And then again, we're 100% overbought again. And the next reversal will be greater value than these weekly reversals that we had here on 8/23. It started again, it went down. This was on the week of 9/27, and we've gone straight up. So the short cover rally, a lot of it short cover rally, a lot of it is that hedge fund managers have underperformed in calendar 2015. Pershing is one example, down 19% for the year. So basically, what we're seeing as part of this rally is where that hedge fund community is coming in and chasing markets to get a performance, or at least their numbers wouldn't be as bad. And this is probably, I would say, 80% of the rally is people that have underperformed the S&P 500 and all the key indexes, a lot of your hedge funds. Hey, a lot of the buying in here is contributed to just that. Stay tuned as we move through the rest of November on the S&P 500. And I'm saying that we are hitting this. This is resistance as of Friday close. This is the top end of that resistance. We will be monitoring it very carefully because you see, like I have just stated, people have been chasing the market, and we have a 6 week rally. We had a 6 week down here bottom movement that was pointing in. We had 1, 2, 3, 4 weeks from that particular high in the S&P, and then on the 5th week and then the 6th week, we can see the 6 week reversal starting over here, and mathematically we have another 6 week rally that's going into major resistance in the S&P 500. Stay tuned so that we can tell you more about 2016 and what that calendar year is going to be looking like once we complete the month of November. Stay tuned, stay in touch, and get real